Welcome back, everybody. Sive Morten is here with the Forex Peace Army.com. Let's have a look at the gold market. So here is also we have not really fast performance, same as in the euro currency. The market mostly stands flat and actually is driven by the external factors, external news. So mostly all markets represents just a reaction on the news stream, especially financial markets, and it's mostly related to liquidity and supply demand on the United States dollar rather than some changing of fundamentals of particular assets such as cryptocurrencies, for example. You could see that the mood of the investors is changing every day depending on what Donald Trump said and what he did, and actually it might move markets from top to bottom just in 2 sessions. On the gold market, the overall reaction stands not as strong, but still it also makes an impact of the external factors. Currently, in general, looking on the overall price shape, how it performs, it's difficult to call as a really bullish performance. Yes, we see some upward continuation, but mostly it remains kind of the rest of the existing previously momentum. So market collapsed, and this is just some rest of the purchasing is coming based on the technical analysis, supported by some news stream. You can see that market shows this lazy upward direction. Recently, market was trying to move higher. Actually, as we suggested that probably it will try to move back to top and trying to take it off. But you could see that here we see that market was not able to do this. And if you take a look at the close on the fall time frame chart, you could see that actually we have a kind of the, better to show you even on hourly chart, you could see the market has shown some kind of the wash and rinse. So it's just grabbed the stops that have been placed above this area and turns down. So this is a short-term bearish pattern, and it suggests that here's some retracement could follow. And in general, if you take a look at the fall time frame chart, you could see that it suggests the upward continuation, some desirable market to keep going higher, but in the current moment it just taken off the stop and stopped. So by taking more extended view on the market, you could see that here is definitely we see some slowdown upward direction, and in fact we have already kind of the godless triple to sell pattern with a completion of the ABCD target. So in fact, here exists some bearish pattern, and in some circumstances, this performance easily might be treated as a kind of the head and shoulders pattern. It's not a perfect pattern because its neck has two big slope, but in a way of the performance, and if market will fail to keep going higher, start moving lower, it might be treated as some kind of the reversal type of the dynamic, especially with this kind of divergence that we have here in place. If on trend on the fall different chart will turn bearish and market will keep going lower. That's why what we see currently and how deep retracement here will be, it will make the direct impact on a bigger picture and what will happen on the fall time frame chart. Since market stands in this consolidation currently, it should support it, and it is not good for the market in halfway to turn down and reaching the support line again. Theoretically, the normal bullish performance will be some minor pullback based on the wash and rinse pattern, and then upward continuation inside of the channel, or even better, some acceleration to the 5K target. That will be normal bullish performance. Correspondingly, if we will see something different, it means that it's not everything good with the activity of the bulls around the gold market right now. So on hourly chart, I think that in the current circumstances, we should do nothing. Just see what will happen in reaction on the wash and rinse, and if market and when it will reach an area around 47.85, 47, maybe 48, so somewhere in this level. Normally, if market remains bullish, it should start and at least trying to turn up again. If we'll see that this keep dropping, returning back down to the trend line, this probably will be bearish factor, and chances on a possible downward acceleration will increase in this case. Yesterday you could see that upward action indeed has happened, but with this upward action we haven't got neither either this hand shorts pattern or the butterfly, just because here's the was the Russian rinse. So in this case, we can't treat it as a wing of the butterfly. This because all the activity has to be inside of the initial swing. In this case, we could get the butterfly. Currently, we also can't count on the butterfly as well. So that's probably what we have on gold. Gold keeps bullish context, bullish sentiment, but this sentiment is very fragile, very dependent on external news. It means that it's maybe very vulnerable and could change actually by the blink of an eye once some news will be released. So we just need to control these vital points for this bullish scenario, and just to not miss the moment where this bullish scenario could become not bullish anymore. So that's what I see currently on the gold market as a primary task. From the practical point of view, we just wait currently for 4785 area, see what will happen, as it potentially might be interesting for position taking if we suggest that market still remains bullish. So somewhere around, market should try to turn up. Correspondingly, if it will not happen, then chances that market will turn bearish will increase.